All Things Money with David Blain, a discussion about your money, including everything from investing and taxes to real estate. Now with this week's program from D.L. Blain Company in New Bern, here's David Blain.
Hello and welcome to All Things Money. My name is David Blain, and for the next 30 minutes, we're going to have a discussion mostly about taxes today. We'll touch on a little bit of stock market information, hopefully give you some information and actionable ideas that you can put into place in your own personal finances. If you have any comments or questions on the show, we encourage you to give us a call or send us an email. Our phone number is 252-633-0107. And our email is allthingsmoney@dlblain.com. That's allthingsmoney@dlblain.com. You also find our contact information as well as information about myself and my firm on the web at www.dlblain.com. That's dlblain.com. And we love to hear from our viewers on cable TV 10 in New Bern as well as 94.1 FM on the radio. Let us know what you're thinking. Let us know if there's topics or questions you have on finance. As I mentioned at the start of the show, we are going to talk a lot about taxes today, as I promised you last week. Before we do, I thought I would give a quick update on the markets. The past couple of weeks have been especially dismal for the stock market. Not quite so bad here in the U.S., but for those of us that invest overseas, it's been quite dismal. The European developed markets have tumbled between 9 and 12%, depending on which particular statistics you're looking at, and a lot due to the recurring debt crisis that's happening. We still expect a year-end or at least a first quarter 2011 rally. We don't expect to see any prolonged weakness, such as another bear market, until the second quarter or towards the summer of next year. We will talk about that on a subsequent show. We mentioned it briefly last week, our reasons for that. But just suffice to say, we think that the current market downturn is simply working off some of the over-optimism that we had throughout August, September, and October. The market simply just got ahead of itself. When we look at some longer-term data, we look at our 42 market composite that we follow, a global composite of 42 stock markets around the world, and a full 85.7% of those markets are still above their 40-week moving average. And essentially what this means is that the majority of countries around the world, their markets are still in long-term uptrends. We'll take a look at the crowd sentiment poll, which is one of our favorite to measure the relative optimism or pessimism of the market participants. As I mentioned many times over the years, we can study fundamentals and economics and all this data. When it comes down to it, markets are driven, especially in the short term, by psychology. And unless you have a firm grasp on the sentiment or optimism, pessimism of the market participants, you're going to get caught without knowing what's going on. You don't necessarily have to trade on it every time, but at least it gives you a good comfort of what's going on. And so recently we saw the optimism peak out. About 69% of the professionals polled were optimistic. This is an overly optimistic statistics, and typically when people are this optimistic, you see the market fall. As of today, we're down to 62.9%, so that's good, working off some of that optimism to set the stage for further progress. Also looking at the U.S., the statistics on the industry groups that we follow, fully 80% of them are also in bullish uptrends. So we don't think that this correction, we think it's actually a good thing, work off some of the optimism. Before we get into taxes, I was handed this article before I walked out of my office. One of the recurring things that we've talked about, something we discuss with clients all the time, is what to do about college. It's a sort of a well-known, hopefully you've heard by now, established fact for those of you with children out there or maybe grandchildren, that in the United States and frankly around the world, higher education is almost a necessity today to get ahead. My father was very successful in life and never graduated from college. To be able to do that today is very atypical, although there are people, Bill Gates notably, one of the more famous people that never graduated from college. So assuming you've made that decision to send your child or help out with your grandchildren, sending them to college, the question becomes where to go. How much should we spend? Should we fork over several $100,000 to try to send them to an Ivy League school? And it's been a great debate. I happen to fall down in the camp of that no, it's not worth mortgaging your entire future for it. There are thousands, literally thousands of colleges out there that could be very suitable for your child, and that the higher cost, sort of name brand elite schools are not necessarily worth the money. In fact, we see that this time of year, a lot of kids are thinking about college, and there was a recent long-term study of 6,335 college graduates that's published by the NBNR, which is National Bureau of Economic Research, and they found that what they did was they tracked students, I think it was back from 1972 to today, and what they found was that children graduated from colleges where the entering students have higher SAT scores, so assuming those would be your more elite type schools, that they had did not pay off in terms of higher post-graduation income. And so this study, which was done over a long period of time, essentially confirms what we have been saying, is that the children that go to a lot of the elite schools, they're going to be successful whether they go there or any place else. That the reason they get into the elite type schools is the reason that they're going to be successful. And so if it creates a financial hardship or you have to take out a ton of student loans to do it, that it's generally not worthwhile because that child will go on and be successful no matter what. One of the things that was interesting in the study, though, that it did mention was that the children that come from disadvantaged backgrounds usually benefit the most from attending college, which makes sense, is that they have sort of the most to gain from moving up the socioeconomic ladder. So when you're thinking about college out there, helping out paying for children or grandchildren, or certainly encourage them to go to school, the unemployment rate for college graduates is a fraction of what it is for non-college graduates and non-high school graduates, but don't necessarily mortgage your future to do it. So when we come back, we'll be talking taxes for all things money. I'm David Blain. We'll be right back after a few short messages.